The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 271. We get the Nasdaq off 104. S&Ps are down 30. Gold contract down $12, trading at 11.88. We have silver down 61 cents. $14.43 an ounce. Light sweet crude off $1.20, $65.83. We're going to get those EIA numbers this morning.
Half hour from right now.
They were basically hitting that oil. They're hitting every commodity out here, folks. Notes and bonds. Bottom line, folks, they want higher price, lower yield. It's pretty amazing watching them. So last Friday had big strength inside the 10, inside the 30. Bottom line, you're getting follow through, and you're getting follow through with wide price spread. You get the volume behind the move. You get the 10 up 11 ticks, 120.14, 30 up 24 ticks, 144.25. King dollar's up 195 ticks, 96.800. The euro is at 113 to 1 US dollar. The yen is out there at 110.67 to 1 US dollar. And it looks like the market went to Sherwin-Williams and they decided to buy some red today.
They sure did, except for canopy growth over there in that cannabis industry.
You know, that, folks, canopy growth, bottom line, Constellation Brands, they came in, monster investment.
Ooh, look at that pullback,
yeah.
though. Okay.
The stock opened at 47. Yeah, stock opened at 47, hit 48. It does have a high volume high. This thing's gonna, bottom line, I expect 48.76. Oh, look at it, tested 48.85.
Yeah, $4 billion. They got 38% of that company now, up from 10%.
Yeah, we are going to see all these booze companies get into this business in a big way. But Budweiser right now, I'm sure, is scratching their head. These guys are so aggressive. They got to move, and they got to move quick.
Definitely.
Amazing. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, Kevin and his team, great program every trading day right here. 11 to 12 Eastern Standard Time, fast markets, and we have a market, folks. We'll see whether it's going to end up being a two-way market. Right now, it's a one-way market. But guess what? When you're talking strategies, when you're talking options, when you're talking the VIX, there's strategies for every market.
Still earnings season, right? Macy's will go over, I'm sure, down about 10% after some good earnings. But go for it.
Yeah.
I mean, just action everywhere for sure.
And they're selling. They get the number, but I think the market's looking at their overhead. I mean, it's
they're looking at something. I haven't dug into it yet.
They're looking at something. There's no doubt. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How you guys doing?
Doing well, man. How are you?
We're doing good, man.
A little busy. We're a little busy today, huh? Another busy day. You know what? I think this market is, the tail of this market is exactly, in my opinion, this. You're talking about geopolitical risks that are making the bonds rally and they're making the U.S. dollar rally.
Yeah.
And, Erdogan, he is not going to do this by the normal playbook. He is dug in Turkey, and he is, basically, some strong rhetoric on what they should be doing. And we talked about this on yesterday's shows here on the TD Ameritrade Network. He's not going to the IMF for a bailout. And even though that's what he should do. So this is going to get a little bumpy here.
Yeah, no.
With him. He's just not doing it the way, that Argentina did it and other countries that needed a bailout with the IMF. He's not doing that.
It's when I look at it, Kevin, I go right back to that Asian contagion. I remember when that started so well. And it started the same, it was a little bit earlier, only by a couple of weeks, folks. And what happened is that it was kind of like this. It wasn't a really big deal. It didn't seem like a big deal. Let's put it that way. And then what ended up happening is that you heard a little bit more about it, but what seems to always end up happening in these deals, it's either one of our banks, it's either a hedge fund that someone's into the bank, that it's not going to be the country itself. It's going to be who invested in the country and who's holding the bag. Because my take is that he's going to take his people down, man. So it's going to be a problem. Do you know what I mean?
He certainly looks willing to, Tom.
Yeah. I mean, this whole thing, give me your gold and give me your dollars and put them into lira. It's like, oh, my God. Like,
dictators don't like listening to anybody else.
No.
So they're not going to take terms from the IMF when they're an authoritarian regime.
Yeah.
You know?
And you know, Tommy, that the terms from the IMF are harsh.
Right.
Yeah.
That's
Right? If they come in, they loan you money and they bail you out, but they come in with extremely harsh terms. And by the way, that's one of the way that Erdogan came into power. Was in the early 2000s when Turkey had to go to the IMF. So he's not going to go back.
Wow.
That's how he got there.
Interesting.
So
okay.
he's got it. Yeah. So it's a very interesting situation. So that's why I think this could linger a little further. Now that doesn't mean the U.S. won't eventually shake it off and return and some of the risks will melt off. But it's just not going to go as quickly as everyone thought. Even though the market was up yesterday, I was saying the whole day that this is not the same. Nothing in Turkey has really changed.
No, there's no doubt. And when you look at those numbers, I mean, Turkey. Every time that I keep hearing these analysts saying, well, Turkey's small and all this, I'm saying to myself, hold it. There's 80 million people. It's the 13th largest economy in the world. Well, that's not small. You know what I mean?
Yeah.
And,
exactly.
Yeah, I think the United States, we don't have as much exposure as Europe has, but Europe got huge exposure, man, and we get exposure to Europe,
Exactly. Yeah. So it's not like, sure, this isn't going to be, the catastrophe of all catastrophes, but if it keeps going, it'll leave a mark for sure on some of these countries that have Turkish debt. So, yeah, you just got to be a little careful here. I mean, like I said, I don't think this is anything crazy, but there's a little geopolitical risk in this market right now. Make no mistake.
So let's talk the VIX. We got the VIX right now up 222, 16
range.
Yeah, 15.53.
Oh, okay.
That's what I have anyway. But that's saying that finally they're basically putting a little premium into this, right?
Right, exactly. And that's, and if it's in the 15, 16 range, that's just a little slightly above normal.
Right.
But that's pretty significant for Labor Day, right? In the middle of August. So it's identifying some volatility in the market for sure that's going on right now. So, you've got the futures down right around 30. So there's, this is just a day of geopolitical risk entering into the market, and the markets are showing that with a little higher volatility. Stocks are making some moves here. The SPX is, down about, it's down just a little over 1%. So there's the 1% move that we talk about all the time. And here's the VIX now approaching the 16 level.
I was going to say that.
Exactly
rule of 16, man.
That's so cool,
Simple math. I like it, totally.
Kevin.
And you know what? That's what we try to do. We just try to help people make sense.
Yes.
Of what 1% equals that 16 VIX. Now you're seeing it in real time.
Well, talk about making sense. Like when I'm looking at the time frame we're at, and you get a pullback, but we haven't had a pullback in so long. It's like, okay, so you can get a 6-week pullback, and guess what? Then you're in October and things can get rosy.
6 week. We got like a 1-day pullback.
Exactly.
Folks, right here, 45 minutes from now. Kevin, thanks so much. We look forward to the show.
Have a great day, guys. Thanks for listening.
Thanks, Kevin.
Tommy and I come right back, folks. Stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The Dow Industrials right now down 265. You get the Nasdaq off 111. S&Ps are down 31. If we do go over there and take a look at Macy's, so...
Yeah, so it looks like it might have been just kind of what they're spending, right? So earnings-wise, I believe they beat by almost 20 cents, right? Like 70 cents earnings per share versus 50. But there's just, so the headline here is Macy's dives most in a year as gains not enough for Wall Street, and that the chain has been spending heavily on backstage concept, makeup, and it's just terms of spending, right, to bring people into the store in general. So you have some comments in here. Quarter's good on sales and margins. Expenses were a little on the high side. One of the analysts was talking about, and that's they're trying to lure those shoppers back to the traditional department stores. Discount-focused, backstage concept. What is a backstage concept?
I don't know.
So an array of off-price items for bargain hunters. Maybe that's kind of what trying to combine maybe something like a Marshall's within the store. Just maybe a little section of their discount. You know, we all love those retail rack within the store.
For sure.
You know, the discount section. 20 locations in existing department stores. And plans 100 more this year. So it looks like they're opening something like that within their own stores, right? That type of...
And then they're expanding Blue Mercury Cosmetics chain. Okay.
Interesting, yeah. So surprise bump in comp sales. Same-store sales rose 0.5% for the quarter.
It's pretty good.
They were looking for almost a full % drop and to come in there. But yeah, something really spooking the people who are really following the stock, because that's quite a drop. Go for it.
Yeah, there's no doubt, man.
And Macy's has a long way in terms of, you know, I'm a fan of the Macy's brand.
Yeah.
But, you know, and I have a Macy's card.
Okay.
Right, not the credit card. I have just the Macy's card.
And
Excuse me.
And what is that?
Well, you can get your discounts there. That's really how you get more discounts. But what I was going to say is
without getting a credit card?
Yeah. So it's just a Macy's account, whereas they want to give you a Macy's card that you can use somewhere else, right? Okay. But I didn't want another credit card, so you just have the Macy's card with them.
Oh, that's good.
Yeah. And I still feel like I'm bombarded with so many sale offers where there's actually no sale. Everything's a sale.
Right.
So And I love sales.
Right.
But those aren't sales. They're fake sales.
The real sales.
That's it. You know,
right.
there's a sale every day. There literally is. So
every day.
Yeah.
So every day we have oil. Not every day, but we got EIA 10:30. Right.
You got it. So it's Wednesday. Let's jump around. I'm gonna pull up the Nadex platform. It's Wednesday. And I'm going to jump over here. Let me close a few of these windows, clear off this palette of charts, and get that crude oil chart up here. So we're jumping into commodities, spreads. You know what's going to happen. I'm going to take a look. Yeah, let's just see where it's trading. And then maybe while I refresh, quite a number on crude, 65.62. So real quick, I'm just going to refresh this, clear a couple items, and what's going on is I want to make sure I have all of these spreads available, and I've had this Nadex platform up all morning. So you just hit the refresh button, you get up here, clear out all these. Okay, we're back to it. Clear that, there we go. Commodity spreads, crude oil, and we'll start it off with the 11 a.m. expirations, okay? So oil right now trading 65.67. We're pulling up the chart. Quite a decline in crude oil. Yeah, I mean, just overnight last night, 2-3 in the morning, we're up at 66.80. Yeah. But to back this up, man, 24 hours ago, right, 9:30 yesterday morning, we're trading at 68.29. We're now almost 3 full dollars, 270 maybe underneath that level.
Big number.
Big number for sure. Okay, so here are the 11 a.m. spreads. We're currently trading 65.67. We're going to take a look at a possible volatility trade, right? So we're going to look for a bullish spread. This would be our bullish spread, 65.50 up to 67. What's nice is not far away, only about 16 pennies away from where oil is actually trading right now. And then on the flip side, we're going to have a very comparable bearish spread, going from the same price point of 65.50, except $1.50 to the downside.
Pretty good. This is nice.
So you're going to have your intrinsic value on the bullish side, right? 65.70. You got about 20 cents of intrinsic value on the bullish side. That's going to cost you 30 bucks. Bearish one's going to be all premium. And there is, so what you can see is when you're adding the intrinsic value here, things get a little expensive because you're paying $20 of the 50 for this entire trade. If you take both sides, is straight up intrinsic value, as opposed to if oil was just trading right at 65.50, you'd be getting just premium on each side. But still, relatively not that bad, especially if you have a little bit of a bullish bias, because you're putting up $50, represents about 50 cents from that price of 65.50. So your break even becomes either 66 or 65. And, you know, you're only about 30 cents away from 66.
And we've definitely had movement today. It's just been a one-way movement.
Right.
Right.
So that is the 11 a.m.s. Let's jump and see how the
51 cents.
Yes.
Okay.
So now the 12s, what's going to happen is because oil's been moving around so much, these are getting set every hour. As in the 12s open at 10, right? The 12 expirations open at 10.
Yes.
So they're getting set where oil is. So they're going to have a little bit different price points because of how oil's been reacting so much this morning. So here, our options are going to be a little bit different. So you have either 65.25 you could use, or you can use 66. 66 being only about 28 cents. Now, what's interesting here is, let's say you were like, okay, I want a volatility trade, but I'd rather be a little bit bearish in the trade.
Right.
Well, things set up nicely for that type of a trade with a noon expiration, because now, very similar, you have $1.50 on each side. 66 becomes the point that we're moving away from.
Yes.
Here is, set them up. Here's your bullish spread. 66 to 67.50. Now, this one's going to have no intrinsic value, right? The bearish spread is the one that's going to have your intrinsic value this time. And let's see how these line up. Yeah, that's quite a number. Now, it's going to be more expensive right away because you have an extra hour.
Sure.
Right? But it is nice how it's not too dramatic how this lines up.
It's intriguing. It's the same. It's the
It
same.
is. Now, let me jump back, because what I'm curious about is that those shouldn't be the same price point that much, right? As in, I'm gonna just pull back up. Where were we looking here? 65.50 was the one. So I'm jumping back to the 11s just to get a good feel. These are our 65.50. We'll be buying it, and 65. That's our bullish spread. Yes, and then there's our bearish. I just wanted to make sure again, because that's pretty cool when they do line up. Yeah, so same thing. 51, 52, and
they're different strikes. That's what we have.
They are
happening.
different strikes. You know, they have different price points on the upper and lower limits of the spread. And then you have either 25 cents about of intrinsic value on one side versus 25 on the other. We're pretty similar. So you're looking at about 50 cents, which, you know, $50, 50 cents, give or take.
Yeah.
And then let's jump into, real quickly, maybe some of these dailies and see how they line up. So right away, the full dailies, which are set actually last night, they don't line up too well because oil's at 65.75 and would either have a price of 67, which we're way away from,
Sure.
or 64.50. But jumping to the 8 a.m.s, yeah, same thing in terms of, you can always get in here on either side, but 66.50 is where, and that's just because oil's declined so much this morning already.
Too far away from the sweet spot.
Yeah, and that's sometimes when you just get, we have almost $3 of oil action since the last 24 hours, and they're constantly updating these, but you can see when oil's moving 50 cents every couple hours, that sometimes it deviates from those. But not bad, 50 cents when you're coming into that oil number. When you have exposure in both directions,
Oh,
right?
big time.
Yeah.
And you're talking about volatility out here, folks. You got it in spades today. Stay right there, folks. Tommy and I are going to be coming right back with those numbers. We have the Dow Industrials down 284. Nasdaq is getting some big acceleration. It's down 125. You get the S&Ps off 33. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 300, Nasdaq's off 135, S&Ps are down 35, and guess what?
Crude's going lower, man.
Whoa,
so far,
baby.
at least. So
you talk about a build.
The number, crude oil inventory is rising, 6.8 million barrels. I believe the expectation was a decline of about 2.5 million barrels. Yeah. So quite a miss. To jump back to the Nadex charts, check out how that market, and there you go, right?
Whoa, baby.
And we'll see if that reaction holds. But, man, in terms of, we're just talking about $3 to the downside almost in the last 24 hours. Well, guess what? We've hit that $3 number now as we're at 65.20, trading lower. We were coming into that number ahead of time, setting things up, and we were let's see, where did that close out even at? 65.83, that 5-minute bar closing out at.
65.23 right now.
You got it, 60 cents to the downside, just that quick.
XLE is getting smoked. That's down $2. That's breaking the whole consolidation it was in.
Yeah, and just to back things up, like I was saying, you don't have to go far, man. To Tuesday morning, there we are. 68.29. We're now exactly basically $3 below that level, so we'll see what happens. But jumping back, we'll see if these populate. So you have gas inventories falling 740,000 barrels as well, and the big top line number though, crude oil inventories.
That is a monster
rising.
build.
It is. Yep, it is. I would agree. Quite a number for sure.
877-927-6648.
Yeah, let's jump over to the chart as we go in here. So this is talking about a table for the 4 weeks, talking about everything, and man, they really break down. It's almost too much info in here to break down everything they have going on. Domestic production, imports, etc. Quite the number for sure. Let's see if they have the breakdown. Yeah, they'll put the breakdown in there, but we'll see.
After surprise, they're saying it's a surprise build in inventories. Man.
Well, yeah, it's because they're expecting a decline of 2.5 million barrels, right?
Oh, yeah. No, I'm just saying that's quite a surprise. Yeah. Like, who's doing their homework out here? I'm not quite sure because that build is, like, incredible, man.
Yeah, and so oil just kind of hanging at about 65.30. We'll check back in one more time, and I expect that oil's going to jump around a little bit for the rest of this hour.
No doubt, no doubt.
Go for it.
If we go take a look at the, the XLE was already down with volume. Now this is busting everything. So you're down 220, you're taking out your swing point. Well, you're taking out the whole consolidation. That's how it's looking. That consolidation, you're going all the way back to April of this year. So this is serious business. You got, it's going to have the volume. We're already at 6.9 million. You're talking 18 million. You're talking 28 million. I don't think we'll get 28. 7 6s. Well, yeah, you can get 28 pretty easy.
Big day like today, right? In terms of commodities taking a hit pretty hard.
Right.
You got the dollar trading higher. You got oil down $3 in the last 24 hours. You could get some action for.
Oh yeah. Big time. We go to ExxonMobil. A couple of the largest weighting. That's down 147. CVX, Chevron. That's also busting its consolidation. And let's see. So, it's gonna have the volume. Needs 6 million. You get to 1.4 right now. Big numbers.
Definitely.
Big numbers. We had our man. Whoops, 1 second. Jim from Palm Harbor. He was calling about the diamonds.
One more time, I think.
Don't buy them, Jim. That's the bottom line. This baby, he's down 230. You're breaking the swing point from 251. You're gonna have volume behind the move. So we've already done 1.3 million. You only need 4 million. And the biggest danger that I see in all these indices, folks, is that we haven't tested. We're just sticking out like a sore thumb. February low. The February low is a monster. It's 233 inside the diamonds. That's a long way down. 233. Oh, look at this. The Dow did test it. 1 second. 233.20. Yeah, the Dow did test it. So that's a different animal. The other ones haven't tested it. So even with that said, your 250, 245 is game. And where I'm going there is that's the high of the week of the 29th. So you get some serious business out here. And let's see if we go into the Dow to see the point deal. We know who's going to be number one. There it is. Boeing, 68 negative points. Caterpillar, 33. Chevron, 23. The Procter & Gamble's putting 3 positive. Travelers 2. Pfizer 2.
I have to chuckle, right? It's like 3 points, 2 points, 2 points. You flip to the downside. The top 2 stocks, Boeing and Caterpillar, alone are more than 100 points to the downside.
Yeah, big time. Inside the NDX 100, let's take a look what you have. So the movers on the way down is you got Micron down 6%, JD.com's down 6%.
Look at those percentages, man.
Huge.
Yeah. Mercado Libre.
Thank you. Mercado, I got to get this down.
Mercado Libre.
Mercado Libre. It's a great sounding name, too.
It is.
NetEase. Look at this stock is getting killed, man. This just every single day it's down big percentages. Look at this thing.
Yeah. What did they come out with their earnings there, and it's just been a run since?
5 days ago it was $64 higher.
Yeah.
That's pretty intense, man.
Definitely. It's about a, what is that, 20% haircut, about 250 to 200. Basically.
5 days.
Yeah.
Crazy. Amazon. Let's go over to Amazon. So Amazon's down $40.
$40.
But I want to know what they're doing with live stream. We got to figure. Let's see. Okay, so what is this? Let's see. YouTube has become synonymous with online video and lucrative advertising.
Amazon's Twitch streaming site is the go-to place for a much smaller audience of video gaming enthusiasts. I've watched some things on there.
Gaming.
So, yeah.
Okay.
Twitch is a huge platform. If anyone's familiar with it, you can live game. So I watch where we've talked about Fortnite on there. Some huge players on Fortnite. They have 70,000 plus people watching them at the same time. They're earning money from those subscribers. Well, of course, Twitch is earning money from those subscribers. Let alone, I play poker, as people know. Online poker players have become almost entertainers in their own right by using that platform in the same capacity, whether it's YouTube, Instagram, but Twitch is that gaming platform in the biggest way. Yeah.
So look at what it's saying here is that the Amazon in recent months has been pursuing exclusive live streaming deals with dozens of popular media companies and personalities. The company's approached lifestyle influencer Gigi Gorgeous, to actor Will Smith about streaming live.
Yeah, and so some of the talent's been resisting some of those, which is like putting minimum hours that they have to do it. You don't become Will Smith by Amazon telling you that you need to work these 2 hours a day every day. You know, that'll be intriguing. How part of the appeal, I think, of that lifestyle is that they just log on whenever they want, and they have their followers, and that's a good deal.
YouTube has tried to blunt Twitch's efforts by offering big payments to some of the top creators as they agreed not to make exclusive deals with other sites. It's going to be interesting, man.
Oh, there's a lot of battling for those views and those eyes. Twitch is an enormous platform, though. Enormous. I mean, I can't understate how big it is in terms of younger generation, gaming generation. I mean, talk about Jason as well. We've talked about it in terms of entertainment is changing, man. You know, the gaming is becoming a bigger platform than some of the entertainment industries in terms of what they do.
Pretty wild, man.
Yeah.
So Twitch didn't let users post videos that aren't game related when Amazon paid $1 billion for the company in 2014. Now they're going to get into it. Cooking.
Yeah, we'll see. We'll see. They have quite a little niche. I'm sure they want to expand that niche, Twitch, but we'll see because it's tough. It's tough, right?
Tough against YouTube, no doubt. Stay right there, folks. Tell me now. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to our man Tom in Plymouth. What's going on, brother?
Hey, good morning, Tom and Tommy. How you been?
Morning, Tom.
Doing great, man. Yourself?
Oh, not too bad.
Yeah? How's that beautiful city of yours?
Pretty nice. Pretty
Yeah.
nice. It's been a hot summer, so it's been pretty nice.
This is a nice time of year down there, too.
I bet it'd be nicer if the VIX
Yep.
was at 20. Go ahead, sir.
Oh, yeah.
We're not looking at the VIX
So-
today. What are we looking at, Tom?
The SCO,
So the,
short crude oil.
yeah, the SCO, folks, is the 200% inverse correlation of the Bloomberg crude oil sub-index. So you're at 1804.
Ultra short oil.
Yeah. You're breaking a swing here. It looks like, let's see.
Going back to about July 17th.
Yeah. And it's going to be close. You're probably going to get the volume. I mean, the way this is setting up, it looks to me like, yeah, you're going to have 1937 on the agenda here.
That was quite an EIA number.
Yeah,
Paul, did you see? Tom, did you see that EIA number that just came in at 10:30? I'm not sure if you were
I
listening.
did. Yeah, that
Nice.
was why I called you guys, because
Nice.
I've been listening to you and Jason there, and he's been saying, crude's going down, crude's going down. I like that guy.
Isn't
He,
he great? Isn't it? No, he's got
yeah.
a great show. I love kicking off with that type of data and the fundamental take, and just he gets a lot in a half hour, man.
Anytime you're talking commodities, so important to have that type of data.
It is.
Because it drives the market.
It's real.
It's like
Yeah,
the earnings for a company, and they come out every week, which is crazy.
Yep.
Yeah.
Big time, big time.
Yeah, so I started buying it last week, and then I bought some more this
Good.
week, and
Well, the way that crude's trading right now, I mean, you have game down here at 62.99. Let's say between 63.94 and 62.99 is.
And is this a delayed? I think we're looking at.
That is delayed, yeah.
Just to get it, because let's see where oil even is right now. Yes, 20 cents lower, 64.90. I
Yeah.
mean, we're talking about almost a full dollar from where we were prior to that EIA number alone. Pretty remarkable.
Yeah.
Yeah.
You get some action there, man. And you know,
so
and it's
we just hang in there, I guess, and see where it goes.
I would, and it's consistent. So watch me look at this chart, folks. What you're going to see, we had that monster downdraft on the 8th of August.
Yes.
You do 760,000 contracts on the way down. It tries to test that yesterday with 538. Okay, 538 against 760 is not that cool, man. And, you know, we're going to get some good size volume today.
And just to put, that's exactly 1 week ago today. So that was EIA last week, the 8th. Today's the 15th, 7 days ago. So big action there. Probably going to be big action again today.
Yeah. And that build was amazing, man. That build actually blows my mind, you know?
It blows my mind in terms of the miss more than anything.
That's what I'm talking
Right,
about.
yeah,
That is, we get plenty of oil, man.
Yeah.
And guess what? The gasoline driving season is just about over.
And that's it. Jason was in the den,
yeah.
man. Jason's in the den talking about it's the end of peak season. And you have that type of a build coming in. You know, what happens when nobody's driving for Labor Day and all that good stuff, you know? It's,
You got the Falmouth Road Race, this weekend?
You got it.
Up there. And after the Falmouth Road Race and the Cape, folks, okay, just about that. Remember, I mean, we never would leave until September, right before Labor Day, or right after Labor Day, because you go back to school.
Correct.
But realistically, it seems like August 15th, right around here, a lot of people leave.
It's the end of August,
Especially if they get a hurricane.
That was one summer,
Hurricane
for sure.
Bob.
Yes.
So, well, we'll do the SCO today, Tom, and hopefully in the next few days you'll be calling back and wanting to trade with the Nugget.
Wow, I don't even want to. I keep wanting to go into that dust, and I keep kicking myself, and
yeah,
That's quite a trend.
I don't dare to do anything. That's why I jumped to oil, and I haven't really had great luck in oil. I mean, I was looking at this SCO way back when. It was a few months ago. It was like 22. And so that's why I started jumping in last week. I'm like, this thing can't keep going down this far. There's no way.
Yeah.
So, anyway, hey, it's all good right now. I don't know what to tell you on gold, Tom. I have no idea. The way they're talking about the dollar, I mean, I don't think gold's coming back anytime soon for a bit.
Yeah, that's good to hear. I like that. But no, listen, man. You can take a look at every type of, whether it's technical or fundamental right now. You know, like with currencies imploding and gold's not catching a bid. That's serious business. There's no doubt about that. It's like, okay, man. You know.
I do keep looking at that USLV though. I'm sitting on my hands. I keep wanting to buy, so I'm gonna keep wanting to buy it. I think it's down to like, I don't know, 750 now or something like that.
Well, and the other side of this, I'm waiting. You know, we know how this thing goes is that when you get close to they do the reverse stock splits again. That's when things kind of get close to bottoms and tops. You know, so we'll see how this baby shakes out.
That's probably what that'll be doing shortly if it keeps going down.
It's not there yet, but I'm with you for sure. Cooking, brother.
All right, take it easy, guys.
Thanks,
Thank you.
Okay, man. Have a great one. Have a safe one.
Bye now.
So let's check back on that oil. It's just not stopping. So it's 10:48 right now, right? We got the numbers at 10:30.
Yeah.
This is your 10. These are 5-minute bars we're looking at. Okay, 5-minute bar. You had 10:25, closing it out at around 65.83. And we're basically about $1 to that downside. And to recap some of these, right? 11 a.m. We were going to be using 65.50. So even that, where we actually had the head start to the upside, right? Because 65.50 was going to be our pivot point, right? Yep. But what really would have lined up nicely on these hypothetical trades would have been the noon, where we were looking at $66.
Yeah.
And you are approaching already with more than an hour and 10 minutes left in there of max value, because you have max value down to 64.50 and you're approaching, but you're 38 cents away from it. And you know, right now,
big number.
Yeah, right now you're looking at $106 of value in just the bearish spread, which is obviously where all your value is. Quite a number.
It's a double.
Right.
It's a double on that.
In terms of both legs that were costing you about 50.
That's pretty intense.
Yeah, and quite a number for crude, and it just don't stop, man. Backing that up, quite a 24 hours. 9:30 yesterday, 68.36. We're now in 64 territory. We might be down $4 in 24 hours by the time we're off the air. Pretty remarkable.
Big numbers, man.
Big numbers.
Big numbers across the board. And, you know, market-wise out here, let me just see something. So you have volume on the indices, right? In the ETF structures. Okay, we don't have volume on the indices yet. Let me just see the NASDAQ. Yeah, it's hard to tell. I haven't looked at that at the beginning of our 11 o'clock.
Where it normally is at this time.
Yeah, exactly, exactly. If we do go over and we take a look at the NDX, 3 Qs, we'll get there's volume there. 18 million. We hit highs, folks. So one hit the last high that was established last week had 18.8 million. We're at 18.6 right now.
Yeah.
The door is never big enough to get out.
Yeah. No, and I think it was on the NASDAQ, you pulled it up at like 700,000, and I think yesterday's volume was like 1.9 million, as in we're almost at like half of the day's volume.
That's
so
a
it
lot
might
too.
be a more, and I agree, there's probably more volume at the beginning of the day, so you can't just extrapolate it out hour by hour. But I'm not sure there's that much volume usually.
No,
it would make sense. We haven't seen the Dow down 300 points this early in a little while.
Right, and the SPY also has volume. So the SPY made a high last week at 43 million. You're at 27. Yesterday you did 43. Now, there's a few little problems in paradise.
A few.
Stay right there, folks. We got Fast Market coming up from TD Ameritrade, Kevin and his team. And, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks.
We got 5 more minutes of the show. We're not done yet. But we'll be right back, folks. One more break. You're not getting out of here just yet.
No, that's right. Stay there. The market will be down another 100 points.
There we go.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 332. Nasdaq's off 135. S&Ps are off 36. That's some big numbers for early in the day.
It's been accelerating almost since, market was down, 150 pre-market. I think I did the 9 o'clock or 10 o'clock update, and it was down 250, where I say an additional 100 points.
Right.
And we might be at 350 by the 11 o'clock update.
Yeah, and you get volume behind the move, folks. So
you think we have a little momentum going on? It's a nice little segue, maybe, to our man Steve Rhodes. So a week from today, Momentum Webinar, how to measure the real momentum for any market, a subscriber event. If you're already a subscriber to Mastering Probability, you'll get access to that on your members page. It will be archived. If you're not a subscriber, perfect time to sign up. A week from today, 5 till 6 p.m., how to measure the real momentum for any market. So Steve Rhodes will be in there with his subscribers.
Nice.
Steve this morning covering for Larry today and tomorrow. Larry getting some much needed rest, recuperation. Will be back here Friday kicking. But yeah, should be a great workshop. You can sign up. New subscribers get a 30-day money-back guarantee, and he'll be in there a week from today for an hour-long workshop that will be archived. And as usual, when you're signing up for Mastering Probability, you get a couple free workshops as well that Steve's done.
It's a beautiful thing.
Totally.
You know, yeah, market-wise out here, just get your stops in, folks. If you're long and strong, or have been long and strong, well, you know.
And one more check on the price of oil. Lows of the session as we speak, 64.73. And just to keep reiterating, because it is a remarkable run, 68.32. Where are we? 68.39, I think. 68.36. I mean, with $4, man, 24 hours oil.
And let me tell you something, folks. Coming into the close of oil today, pick close will not be
130, correct? I believe. Yeah.
Big number.
Big number.
Stay right there, folks. Fast market's coming right up. Dow down 320, Nasdaq off 136, S&P's off 37. Thanks, Bill.
Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter